On Tuesday, Canfin Homes reported an 11% on-year rise in net profit to rupees 158.07 crore in the September quarter. Sequentially, however, it's a 13% drawdown. The sequential fall is most likely because of the hit that the HFC had taken on account of fund management fraud worth rupees 38 crores at its Ambala branch. We have Mr. Suresh S Iyer, MD and CEO of Canfin Homes, joining us to break down the numbers for us and tell us what is the way going forward. Welcome, sir. My first question to you is that what are some of the internal control measures that you have taken to ensure there is no repeat of such case in the future? The investor presentation has also some of the details in it, but if you could elaborate on the steps taken.
This main issue that happened here was because of the reconciliation and the controls at the branch. And the decentralization of the entire disbursement process. So post this incident, we have centralized the disbursement. So now all the disbursements that are happening effective 1st of October, they are being verified prior to disbursement. They are being verified at the head office. There's a central team which is sitting, and post that the disbursements or the demand drafts are getting prepared. So there is an additional control that has been implemented. The second control that has been implemented is that we are also started the centralized reconciliation. So that is the second step, where again a central team is sitting and doing the reconciliation directly from the bank statements that are coming from the banks. So that is the second control that has been implemented. This is in respect of the particular process which had some flaws because of which this incident happened. Other than that, also we have taken certain steps. And additionally, in this matter itself, we will be also going for an online reconciliation process, which is also going to be implemented very shortly.
Okay. So are there any other cases as such that you have reported or the investigation has shown that there might be some other cases like that? Have there been other cases at the branches?
No, in fact, we have very clearly mentioned in our report in the filing also with the stock exchanges that this was a very isolated case, which was only at one branch. The management has carried out a very extensive exercise, not only for this branch, across all the branches, and it is confirmed that this particular incident was only limited to this one branch at Ambala. And the entire impact of this particular case, which is actually 39.67 crore net, that amount, entire provision has been taken in this particular quarter itself. So the 100% provision for that has been made. And since this is a non-asset related fraud or non-asset related misappropriation, so there will be no impact in terms of the yield, the spread, or in terms of the quality of the book, the NPAs, provisioning, or anything of that sort.
Right. Right. I was actually looking through the investor presentation, and then I found out that the hit on Canfin Homes' bottom line is larger because of this incident. Otherwise, it would have been around 237 crore rupees. The net profit would have been 237 crore rupees. Right. So coming to the asset quality, you have Canfin Homes has provided for 112 crore rupees for ECL provisions under stage 3 assets for the first half of FY24. So what kind of stress do you see in your loan book going forward, and in which segment, if you could elaborate on that?
No, I'll just clarify here. This 112 crore of provision, ECL provision that you're talking is in terms of the entire book, not only for the quarter. So we would already have been carrying some provision as of March itself. So the incremental provision that we have made for the entire year is to the tune of about 85 crores, of which 39.67 crore is in respect of the particular fraud incident at Ambala. We have taken a management overlay, which is over and above the required provision. We have made excess provision as a precaution, as a matter of prudence to improve our PCR. That is to the extent of 17.28 crores. So only the balance around 28 crores is the additional provision, which is because of the 16% growth in the loan book, as well as also because of the slight increase in the NPA and the whatever has been calculated as per the ECL. So that provision that has happened because of the ECL is very much in line with the regular growth, regular increase in this thing. So 112 basically is inclusive of is inclusive of the previous year's provision plus around 28 crores which has been made during this year.
Okay, that gives some clarity. So the provision coverage ratio this quarter is 44%, which is lower than most housing finance usually do, because I understand that the housing loans are secured, they have a collateral. But are you comfortable at that level, or do you think there could have been more provisions provided, provisions for this quarter to support the loan book?
In fact, we have made extra provision this year. So our ECL provision, that is the mandatory provision that is required only to, as per the ECL guidelines, that is coming to around 44%, which comes out to the 112 crores for stage 3, as you mentioned earlier. That is against an entire NPA book of 254 crores. We are required to carry a 112 crore provision, which is 44%. But we are already carrying 17 crores as of March in over and above the required provision. Plus this quarter, we have also provided for another 17.28 crores. So our extra provision that we are carrying is 34.28 crores. So that added with 112 crores is what we are carrying, which comes out to around 63% in terms of the provision coverage ratio.
Okay. Okay. So understanding from the rate sensitivity point of view, what is the ratio of the affordable housing in your loan book versus the non-affordable housing segment? Because affordable housing is more rate sensitive. So what is the impact that you're seeing on affordable housing loans due to repeated rate hikes in the last in the last year or so?
In terms of the rate hikes, I don't think there is much of an impact because, as I said, the restructured, I mean, as I've, it's there in the presentation as well, that our non-restructured book, which is there, is continuing to have the same NPA, gross NPA percentage of almost 0.55%, which is just marginally 0.57 now. So the impact of the rate revision, which happened last year, has not impacted the repayment or anything much for our set of customers, be it affordable or non-affordable. So there's not been much of a difference. Whatever little spike in NPA we have witnessed is mainly because of the restructured book which has come out of restructuring. And we had offered a 2-year moratorium to these customers under the restructuring, special restructuring package. So those customers are now coming out of restructuring, and there we are witnessing some increase in the NPS. But other than that, there has not been much of an impact, or in fact, I would say almost no impact on because of the rate hikes on the non-restructured book.
Okay. Okay. So from what the numbers suggest, the rate of growth at Can Fin Homes, it has been slow. It's not as fast as one would expect because HFCs have usually a smaller loan book size than the banks. So what is the issue there? Is it a demand issue, or has the management taken a conscious call that this is not the time for us to grow? Maybe we have to look at other things that need to be taken care of.
See, first of all, in terms of our sequential performance, our disbursements have grown in Q2 compared to Q1. So there has been a marginal improvement in the disbursement. But yes, compared to Q2 of previous year, there has been a slight drop. And that is mainly attributed, one, to the incident that we had, because of which sentiment was affected. Plus, as mentioned earlier, we have introduced certain other control systems and processes, because of which there is a slight additional controls which have been implemented. That's the main reason why there has been a little slowdown. And even otherwise, as I said, since sequentially it is better, we expect that to continue. And we've also had a good amount of inquiry and logins which have happened during the second quarter. So we expect the business to get converted in Q3 also. So it should continue to improve going forward also.
Okay. Okay. So are you cross-selling any of the home loan products to Canara Bank customers as well? Is that happening?
No, we don't have any tie-up with Canara Bank. Neither do we get business from Canara customers, nor do our customers get extra loans from Canara Bank. Of course, in many locations it could just happen, but it is by choice of customer, not by any design from our side or from Canara's side.
Okay. Okay. So the last question for you is that what is the way ahead for Can Fin Homes in terms of growth? If you could just give some target for this year or FY25, what is your outlook on what is our outlook and strategy?
As I said earlier, we have a good pipeline in terms of the logins and inquiries. So Q3 and Q4, we expect the business to be better. Even otherwise, with the start of the festive season, the demand generally picks up. And we've also, like a few other competitors, have started offering a little bit of a better rate and everything to our customers. And therefore, we expect the demand to be good. And going forward, I think we should be able to reach around 10,000 crore or a little above that by the end of the year, because we'll be able to catch up a little in Q3 and Q4.
Okay.
In terms of disbursement, we'll be able to reach about 10,000 crore. So that should come somewhere close to our estimate of about 18% growth that we are targeting.
Right. Right.
We are working towards to maintain the same guidance in terms of the asset growth.
Okay. Okay. Thank you so much for taking our time to speak with
Thank
us,
you.
sir. This was Mr. Suresh S Iyer, MD and CEO of Canfin Homes, clarifying the metrics of this quarter's earnings of the Housing Finance Bank and the way ahead. Thank you, viewers, for tuning in to BQ Prime.